Hey guys, welcome to this Trading 101. Hopefully it'll give you some insights into trading if you're new, and obviously if you're not new, hopefully you can pick up some new tips and tricks that maybe you haven't really noticed in your trading journey. I'm going to try and see how far I can get with this video in terms of what I can cover. For anybody who's new to trading, there's various ways that you can trade. You have people who enjoy scalping, which is basically they will be on a 1 minute, 5 minute, or less than an hour a day with their scalping. So they're quick in and quick out. I suppose for very volatile assets like Bitcoin, this is quite a good way to trade that. There are some people that can swing trade certain instruments as well. And there are obviously day traders. So you've got a mixed bag when it comes to trading. In terms of the trades that I do, I'm quite versatile now. I've been trading for just under 3 years. It's not a long time. However, they do say if you learn, from everybody first, then you get a head start and you're, a little bit faster in how you kind of gain results. So hopefully, with, the time that I've spent learning each of these trades, hopefully, well, the time that I've spent learning how to trade, hopefully I can, improve on your speed of learning, and hopefully you can get to, some faster, quicker results on your journey. So I tend to trade very liquid stocks, like the top performing ones like NVIDIA, Tesla, Palantir. These are the mainly daily. I like to trade NVIDIA, although a lot of people do like to trade the S&P 500 or the QQQs. Obviously, if you're not really aware of these particular instruments, then do check with ChatGPT and obviously do more learning in terms of the background of the different instruments that you can trade. So this tutorial is just really it's going to be like a brief outline of different ways that you can trade. I just thought I'd do a video, and then obviously if anybody wants more information on specifics, then I can do more videos. But before I continue, just a disclaimer that this is just for entertainment purposes only. It's based on my experience and what I've learned so far trading. So, don't take this as, the only way in which you can, progress. There's lots of people teaching you how to trade. This is obviously just one way that I like to I found quite successful in, the trades that I've taken so far. Like I said, it's not always that easy when you first start. So the more you learn, the better, really. But hopefully this video will help you along your journey. So, like I said, I've been trading for a few years now, and I've learned from a lot of different people. There's so many strategies out there, so many ways in which you can read the market. But let's just be very simplistic about trading, okay? It's a very easy thing, the stock market. It's not difficult. The stock market, if you look at the charts, it looks very random, but as with anything in life, nature looks random. But if you look at it, there are Fibonacci numbers that explain nature in terms of mathematics. So everything at the end of the day has a pattern to it. If you think of, if I put it in an easier way, if you think of 4 seasons, and if you're a farmer and you learn that there are 4 seasons in each year, you can start to understand how it is, how easy it is to learn how to be a farmer. But if you're unaware that there are seasons in a year, then you'd be pretty much quite a terrible farmer, wouldn't you say? So what I'm trying to say is, with everything in life, there are patterns to everything. There's even patterns to trading. That the more that you examine it, the more that you look into trading, the more that you'll see, yes, I understand why people have so many systems and so many strategies, is because everybody sees a pattern, and what they're trying to do is, every time they see a similar pattern or the same pattern play out, they want to have a way in and a way out. So like I said, the stock market is quite a simplistic creature. It's not difficult, although you see like candlesticks move up and down quite vigorously sometimes. It's all based on some type of pattern that it follows. And like I said, there's only three. When I say the stock market is quite a basic creature, there's only three ways in which the chart can move. It can either go up, down, or sideways. That's the only three possibilities that it can. And as you can see on the chart that's before you, looking at NVIDIA or any chart that creates candlesticks, you can see that there's only three types of movements. If I move it to a daily, it's easier for you to picture this. So if I just clear off all these, there we go. Can you see? And if I move it to a monthly, it'll be even clearer to see how basic. Oh, bear with me a second, guys. I'm drawing on my video, which I wasn't intending to do. Just bear with me a second. Okay, here we go. So looking at the monthly chart of NVIDIA, you can see that we're trending upwards, and with most stock markets and with most stocks in the stock market, they do trend upwards over time, and hence why people like to invest in them. So as I say, the stock market either goes up, it goes sideways, or it goes down. And those are the only three movements that you have in a stock market. So with that being said, how do we trade this beast? You know, we know that it either goes up, down, or sideways. How do we know when it decides to do what it does? Well, this is where you have to employ what lots of people call moving averages. So I employ a few different moving averages depending on what type of trading I'm doing, whether I'm doing scalping or whether I'm doing swing trading or day trading or long-term investments. So I have on here, you can see if I'm scalping, I have the moving averages of the dotted line, which is a 4 exponential or simple moving average. Then the white line is the 8-day moving average. So it's basically averaging 8 days worth of candlesticks to give me that line. And then the blue line is my 20 exponential moving average for scalping. And the purple and the yellow line are my long-term trends to see which direction is this actually moving in. Are we still going up or are we going down? So it's clear to see that NVIDIA is still, it has some pullbacks, but in general, it's still in an uptrend. It hasn't changed its mind into, going into a bear market. It's still quite bullish for now, although we are pulling back at the moment. So the purple line is the 50-day moving average, and the yellow line is your 200-day moving average. So this keeps me in check as to, where the stock is moving at the moment. And like I said, this is, a simple training video. It's going to show you what I like to do when I'm trading. So if we say we would like to scalp for the day, Or if we like to day trade, let's do day trading, because this is what I tend to do every day. I tend to trade NVIDIA every day. So what I tend to do is I use what's called options. Now, when you're trading, there are lots of different ways in which you can trade to make money. You can use what in the UK is allowed. It's called CFDs. I've never traded these, although I can understand why people like to trade these, because it's just a direction play. And obviously, there's leverage involved. And that's where the danger comes in, because every time you're leveraged, if you're leveraged and it goes your way, you know, good. If you're leveraged and it doesn't go your way, not so good. So this is why CFDs are kind of pretty much only based in the UK, and I think they're banned and everywhere else. I'm not sure about Europe, but a lot of traders do like to trade CFDs, I believe, in the UK and in South Africa, from what I understand from the trading community. What's most popular for traders, day traders, or even swing traders, are options, which is a US. It's mainly in the US that people like to trade options, although a lot of people in Europe do like to trade options as well, but they have different terms and conditions. So I like to trade options according to the American system. And this is leverage, but in a different way to CFDs. So basically, when you place your option, whether you buy an option or you sell an option, it is kind of, you can control how much you're going to lose or win. So that's good. So it's leveraged to the point that, you know, if you're going to place a particular option, how much you could potentially lose or gain. So it's under your control. So this is why I enjoy options, because it gives you the leverage side, but not quite the dangerous side, as in, you know, in terms of you're not quite sure how much you could lose. So I like to use options. And then the newest form of trading, which everybody really enjoys, is futures trading, because there's lots of benefits to futures trading. Because with options trading, you've got to understand the Greeks, which I only know the basics of the Greeks, which is that theta and delta are the two, and gamma obviously are the three important Greeks that I tend to focus on. So I enjoy playing the open, basically, with every move of NVIDIA. I enjoy playing the open, because at the open you have the most volatile moves. So it shoots either quickly upwards or shoots either quickly downwards. And if you can catch this in a scalp, then gamma helps you a lot, because there's such a term as a gamma squeeze. You can look it up with ChatGPT in your own time. But basically, when you buy an option, and say the option only costs you, and I'm talking about pennies, well, not really pennies, it's going to be a few quid, but say the option only costs you about, I don't know, 20 to 30 pounds, that's UK pounds, then with a gamma squeeze at the open, you could literally double your money, triple your money, and depending how fast or how volatile the stock can move, you can imagine how much you can gain from being in a leveraged option. So the option for me is a good play in that way, that you don't have to, you know, use a lot of money in order to make a lot. So a lot of people, they will tend to buy more than one contract. So if one contract only costs you, say, £30, and if you double that, then it's £60, but then your gain could be 3 times as much or 5 times as much, depending on how volatile the open was, either to the upside or the downside. So as you can see, a lot of people like playing options for the gamma squeeze. Another way I like to play options is I tend to use what's referred to as an average true range. Now, this is why people say, some people recommend that you should stick to a particular stock so you understand its movements in and out. You know, you're quite well versed with how a particular stock likes to move every day. So with NVIDIA, like I said, I always enjoy trading NVIDIA daily, and I've been doing it for some time. So I realized that NVIDIA moves on average about $5 to $6 on average. However, if the stock market is obviously very volatile and there's lots of movements, lots of activity, then you can expect that NVIDIA could move about $9 to $10. So knowing this, when you play options, you need to pick a direction at the start of the day. And that comes from, learning how to look at the charts and read the charts, especially before ahead of the actual day. Because let's say if you look at NVIDIA at the moment, I'm on a 15-minute. If I move to a 1-hour chart or even a 4-hour chart, I can show you what I mean. So as you can see on this 4-hour chart, NVIDIA has started since March of 2026, earlier this year. NVIDIA has started to make its move up. But on doing so, it's reached a point where it's gone from this amount of 160 something all the way up to past 230. So at this point, NVIDIA's cooling off, and obviously it's downtrending. So as you know, it's starting to downtrend. You're looking for plays to, to go downwards rather than upwards. So if you go into a 1-minute chart, 1-hour chart, sorry, you can see now that NVIDIA is starting to move into a downtrend rather than uptrend. And the 200-day, the yellow line, shows you that if NVIDIA continues to be in a downtrend and it's below its 200-day moving average, well, you can expect the next play to keep going down. However, at the moment, NVIDIA is kind of reaching the point where it may want to change its mind and go up, change from a downtrend up to an uptrend. And you can see that from the fact that it's put in the lowest low. And as it's pulled back to the 200-day moving average, it's starting to make a higher low, meaning I think it's wanting to make its move back up again, and it's wanting to break this downward trend. So now that you know that on the 1 hour, what you're looking for is any moves to the upside from this point. So like I said, NVIDIA moves at about, on average, $6 a day. And if the trade is very, very active, it can get up to $9 to $10 a day. So knowing this, and knowing the fact that that NVIDIA is looking to uptrend, any pullback now that you can see here, like this pullback, you're looking for an entry to go higher. So when you play options, and you already know this because you're looking at the charts in advance, and you can see that NVIDIA on Wednesday, the 17th of June, it had hit this bottom of $202. So at this point it's looking to climb. So as it's looking to climb and you're moving into Thursday, you have a pretty good idea, following the moving averages as well. They're looking as if they're curling and moving upwards too. Look, you can see the white, blue, purple lines are all starting to curl. So the white line is the 8-day moving average, which is the faster moving average. It's picking up speed and it's getting ahead of the 20. And both the 8 and the 20 is now picking up speed and going, above the 50-day moving average. So it looks as though all prices are starting to move upwards, which is giving you a very good projection. This blue and this, other box here, this brownie color box, the blue and the brownie color box, both of these are post-market and pre-market trading. So when you say you trade the stock market, most people talk about the black part in between, and that refers to the New York Stock Exchange, which opens from 9:30 to 4 p.m. following the New York times. So if you change the New York times to UK time, the opening market is around about 2:30 in the UK, 2:30 p.m. So as the stock market closes at 4:30, you have post trading, which is normally considered the Asian market. So this blue part is the Asian market. And this is where you can see people in Asia trading this stock upwards. And it's continuing with, you know, the London markets and the European markets, which is the brown box here. So you can see there's a consistent price gain every time that it's moving from post to pre-market. There are more buyers jumping in. And as New York starts to open, you can now see that the pattern has continued. There is an uptrend going. So knowing this in advance, what I'm looking for, especially on this Thursday stock market open, especially for my options, is first of all, I know NVIDIA would like to move at least $6 to $9 every day, bearing that in mind. So where you see the pre-market is hovering at around $206, you can see that if it hits that 206 upon open, which it did, you need to spare in your mind, and this is the only maths, by the way, that you need to do. But even then, I'm not very good, and I still need a calculator just in case I get it wrong. So this is the only time you need to do some maths and pre-thinking. So knowing that it moves about $6 on average, you need to add $6 to that 206 opening price. So that means at some point during the day, NVIDIA could reach 212. And on this occasion, it nearly got there. It got there towards the end of the day, but the highest it got was 211, which is pretty close. So like I said, on average, it can go $5 to $6 on average. But then on a very, very active trading day, it can get up to $9, which is a fantastic move. So anyway, guys, what I'm trying to tell you is with options trading, you can trade this on a 15-minute because you're waiting for these candles to play out. And 15 minutes, I find, gives me the ending quite nicely. So by the time 15 minutes is up, I know it has or has not reached the price that I'm aiming for in terms of the average true range, so I can get out of my options play. So that is kind of, you know, a quick summary of how options can be played with, you know, very good stocks that are in, you know, the S&P 500 or in the QQQs, and that are like super traded, like with so much volume that you can get in and out of your trades very easily. So as I say, knowing that there was the move for NVIDIA was going to be up, what then do you need to do? So for me, knowing that there is an up move, it's in an uptrend on the open on a 15-minute chart, but at this point I will go down to a 1 minute because I want the best entry price. So knowing that we are going to go up for the day, this is where some people, if they get into the minutiae of trading candlesticks, they're going to be lost, because if you look at this, you don't know what the heck's going on. But if you already have like a predetermined, you know, plan for your day in terms of what your plan of action for your trading is, then you know in advance what you're looking for. So for me, unless there is some news, as there always is when Trump's in, you know, in office, if there is some, you know, unexpected black swan event and, you know, everything's going to go tits up, you know, the world's going to like explode or something, pretty much, you know, it's going to go according to plan. So my plan for the day on Thursday was I'm waiting for an uptrend, and I'm waiting for my $6 to $9 move, whichever. So more likely it will be $5 to $6, because on average that will be, you know, NVIDIA's expected move every day. So then my plan of action would be on the 1 minute charts as it's coming out of London and Europe and entering the open for the New York Stock Exchange to open at 9:30. As you can see here, we have a 9:30 open. You can see the candles from the pre-market go high, and what I'm looking for is the lowest price entry because I want to go up. Okay, if I want to go up, I want the best price in. So most of you probably heard of the phrase buy low, sell high, or the opposite. But in this case, I want to go up. So if I want my stock to go up, I don't want to go in. I don't want to get in at a very crazy high price. I want the lowest price possible to get the maximum gain when I'm out of the stock. So like I said, here, knowing that in advance, I'm waiting for these candlesticks to give me the lowest price possible of the day before I enter my trade. And on this particular day, it got as low as 206 before it decided to make its move. So knowing this, I was prepared and I was waiting for the lowest price that NVIDIA could give me for an entry point. And on that entry point, I entered my options trade. And normally, like I said, options decay. If you're going to buy options, it's going to decay rather quickly. So I give myself at least a day or 2 days. But sometimes you can play 0 DTE, meaning you buy it on the day and it's got no time left, meaning it's going to decay really, really fast. So when I say it's going to decay really, really fast, it's not a good idea to buy here and then sit through all this, gubbins are going down before it goes up. And even still, if you're going to sit through all these messy candles as it's, salt and peppering along the way, up and down, it's going to decay your options very quickly, your contract. So you don't want that. So what you want is, an option contract that's going to give you time in terms of, it won't decay as fast, so that you're waiting for the stock to make its, $5 to $6 move, and you haven't lost much decay or much premium in your option when you've bought that option. So you have to weigh that out and you need to practice. So I normally would recommend anybody who's learning to trade, like this is a trading video 101, that you should open demo accounts. There's always lots of free demo accounts, and one of them is TradingView. So I have an affiliate link to TradingView, and it's all free. It's a free platform to use, but it'll help you get started on how to chart, how to, start learning how to look at the charts, and obviously placing dummy trades on there. And these dummy trades are going to make you clever over time. They're going to make you like super intelligent in terms of like how to look at a chart, how to enter a trade, and how to exit a trade, especially if you know what strategy you're using. So as I say, this is what I tend to do. I tend to aim for my option play every day, knowing what I know about the stock that I trade. I have like a few times traded SPY, which is the S&P 500. Now, because I didn't know this when I was fresh to trading, but the more that I learned and the more that I practiced and learned and traded, I realized very quickly that the S&P 500 can be really frisky. Like, why I say this is because the S&P 500 is made up of 500 companies. However, only, the top 7 dominate it, which are the fastest moving companies in the world, like NVIDIA, Tesla, Meta, Microsoft, Google, Palantir. All these companies make up the majority of the S&P 500. Now, if one of them have earnings, or one of them have, some crazy news event on that day, you can see some crazy sharp, very, wicky moves with with SPY, meaning it can wick you, it can spike up or spike down, and it's super volatile. I had it once where I was in a trade and I was waiting for the trade to finish, but then suddenly something came out, obviously with one of the stocks, and it just made the S&P 500 just do a crazy move, one way or the other, but it completely ruined my trade. So from that point onwards, I thought it's not really stable to trade the S&P 500. So I've opted to just stick with, stocks, because obviously it's easier to follow one stock than it is to follow like 7 of them in terms of what news is happening. And if you can imagine, if Tesla is one of them, you're going to have like a nightmare, because you never know what news can spike Tesla up or down. So in that way, I've always tended to stay away from the S&P 500, although a lot of people do like to trade them, for daily income using, option spreads, which is like another topic I can go into later. But option spreads can be fun, but they kind of like cap what you can earn. I mean, if you're good at reading charts and you get capped with playing spreads, then that's just a bit annoying. So sometimes it's nice to play options, but then most of the time, if you can read the charts and you know what you're looking for, and it does behave in that way, then pretty much you're onto a winner. But like I said, this is all for entertainment only. Don't start anything that you've no idea what you're doing. Obviously get yourself educated with trading, because it's not that difficult. Like I said, the stock market either moves up, down, or sideways. There's not really much else it can do. And there's lots of videos I can make on this in terms of, how to read the charts for long-term investment. And, obviously, if you're going to do long-term investments, you'll be looking at different longer time frames, bigger time frames, like the weekly, the daily, the monthly, for your entry positions and exit positions. Now, that's what I'd like to trade every day, my options. However, there is a new trade that I've started following recently, and I found like quite a lot of success with it. This trader is a UK trader, and mainly there's more US traders than there are UK traders. So when you come across a UK trader, it's like, oh my gosh, what do they have to show me? It's like a gem. There's not many of us. So this UK trader kind of blew me away in terms of their strategy for scalping. Normally I use the 4 and the 8 and the 20 to scalp, meaning I scalp intraday. So you can scalp for 1 to 2, 3 minutes, 5 minutes maybe, but 15 minutes max. I never scalp more than 15 minutes. So if you're looking at this NVIDIA chart here on the 1 minute, you can see the candles are pretty crazy, aren't they? So like, how do you know which way it's going to go? Like, it's not easy, is it, to tell which way is it going to go? And this is kind of the situation that I found myself at the beginning. So I've had to educate myself and learn how people get in and out of these candles, before they appear. There's no good looking at it afterwards and saying, oh, I knew that. Everybody can see something afterwards. So what I learned from this UK trader is that he has this, and I think he should, patent this term, because it's unique. However, in its uniqueness, it's also like really kind of mind-opening, and it really sits with you when you're trading, because what I can tell you over the time that I've been trading, what you don't want to do when you open a chart is just be overwhelmed and be confused from the offset, because from the onset, because as you open the chart, it's moving quite dizzily, like it's moving quite fast, and it's like every minute candle moves super fast. And you don't want to be thinking, like the last thing you want to do is be thinking at that point. You need to just you need to just be in an action mode and not thinking mode, because it's moving too fast for you to think. So you need like a strategy which is very, very easy to remember and to do and to watch and to learn and like to implement. That's what you need. And this is what this guy, I believe, is onto a winner, because I've been practicing it, and I have found that practicing it at the open for about a week now, I found that it works, and I found that it's very easy to follow, and it's not difficult. Like my mind doesn't go blank, and I don't get confused by the way the candles move, but I'm anticipating what the candles are going to give me before I jump in. So he terms this his river of value. I think it's like a brilliant term, because in this day and age, I think everybody can understand value. You know, with the prices of everything going up, value is what you're looking for all the time. So from this, he's like really opened my mind as to when I should enter a trade. And there's no like guessing. There's no guessing. You really need to watch the candles. So why he calls it a river of value is because of this. Let me close down some of these EMAs so I can show you. So if I knock this out, and if I knock that out, okay. So what he has on his chart is basically just two moving averages. He has an 8 EMA, which is the white line, and the blue line is the 20 EMA. So between the 8 and the 20, he calls that in between there a river of value. Why does he call it a river of value? What he's trying to tell you, because in his decades of trading, he has learned that all candlesticks at some point need to return to the river of value. Price needs to come back to an area of value that it believes is worth that, you know, that trade. And if it goes far away from the river of value, it has to come back to it. Price needs to revisit that before it makes its decision as to, is this value up or value down? And I think that's just like perfect. I think it's just like amazing, that concept that he's given me, that he's like showing on his channel. I'll link him in the description, but he's been trading for an awful long time now. And so he's got this down to a T. So what he's trying to teach you is this. I mean, even this isn't very clear, but pretty much you can understand it if you can look at this and understand it. This is how simple his river of value concept is. So like I said, the open is always like the best time to trade. That's where you can get like the juiciest gains. And as you can see from pre-market, you can see the volume in pre-market is pretty dire, isn't it? Pre-market, there's not many people trading. It's only when the New York Stock Exchange opens that all your hedge funds are starting to trade. Your big banks, you know, your big corporations, these are the people that are leading the trades, and they're giving you these big moves. So as you can see from the pre-market, that it's just wobbling along. It's just like meandering along the river, but it's not really doing anything until it comes time for the New York Stock Exchange to open. And what does it do? The first thing it does is it crosses the river. You can see that massive red candle there crossing the river of value between the 8 and the 20 EMA. You can see it cross it, completely crossing it with that huge wicky red candle. And when it crosses in this manner here with a red candle, very deliberate, you can tell that we're onto a downtrend. So you know, if it's going to cross this river and it's breaking down, you're looking always for value. So once it's crossed this river and it's ended, then it needs to like fill the gap. And as it fills the gap, it's filling it with this green candle. So the first movement is this movement down here, this red movement crossing the river. Can you see the river is so tight? It's crossing the river. And as it crosses it, it gives you a pullback. And what do I say? I say when you're trying to trade, if you're going up, you want the lowest price, right? If you're going down, you want the highest price so that you can get out at a very good price. The difference, you want the difference. So if a stock is falling, you want to buy it high. Does that make sense? Let me say that again. If a stock is going down, you want the highest price to get in at, so that when you're selling down again with it, you want to get out and make the difference. And the difference is that huge red candle there. So as it was crossing the river and you can see it going down, you're sitting now waiting for a green candle as your entry. Because as that green, and this is where moving averages become important. That 20 or the 8 is where you want it to hold support and resistance. In this case, you need that to be resistance. If it goes any higher than this 8 and this 20 moving average, you know that this trade is off. Like, you know, they don't want to go down. But as you can see with this green candle that's, you know, retracing the move of this massive red candle here, as it's going up, what does it do? It stops at resistance and it wicks there. And what he teaches is the wick. You enter in at this wick, because whatever this wick is compared to this whole movement here, this whole price movement of this red candle here that's going down, that is the difference that you're making. And the risk that you're risking is just this wick compared to the gain of this huge red candle. So I don't know about you, but I can see that that is value. If you're just risking this small amount here for this huge win here, then you're onto a winner. And you know, this is why people love scalping, because it's just in and out. It's quick. This was just a 1 minute move. This whole candle, it moved from 931 to 932 and it was game over. In 1 minute, you could have made that if you'd known when to get in. If you knew exactly to get in here, you'd be waiting at that point for your strike. And as you struck here, you would have ridden this whole 1 minute candle down and you would have got out straight away after one candle was done. That was your move. And that, I don't know what you know, in any book, that would have been like a superb play. That small risk there, that wick to this huge red candle as your gain. And that is what he calls his river of value. And you can watch it over and over and over again. So when it came to the end, it started like, you know, trying to cross back over the river. Because as you can, what he always tries to explain is once you move away from this river of value here, this 8 and 20 EMA, when you move away from that, price always wants to get back to value. It never wants to extend value. So price is starting to move back to value. And as price moves back to value, you can see with this, first of all, these green candles giving you a pullback, giving you another green candle. And that final green candle that crosses the river of value there, this final green candle here that I'm highlighting. Let me mark it with TradingView's super cool tools. Like I said, there's an affiliate link down below, guys, so use that. So this green candle here, as it marks the breaking crossing of the river of value, guess what, guys? You do the opposite. Like here, what were you doing? Let me just clone this so I can explain. So what were you doing here as it crossed? On the first crossing, it was going down. So you're waiting for a good price of entry, a high price to go down. Now you're doing the opposite, aren't you? You're looking for it to cross up. So as it's crossing to go up, you're looking for a low price to get in, to get out at a high price. It's always the difference that you're making, guys. That's what trading is. It's just the difference. So with this big green candle that's crossing the river, you now wait for this red candle, guys. Look, this red candle here, this doji, it's called a doji. I won't get into it in this video, but a doji is a very good candle that can tell you what's happening. So this doji is telling you that sellers are trying to sell it back down, but can you see that it's like a cross? Can you see all the buyers are pushing it all the way back up, and it's sitting above the 20 EMA? Can you see it? The buyers have pushed it all the way up, but as it went all the way down here to 206, that's your in. That's where you get in, because you're trying to ride this candle up. So you would have got in at this bottom price, okay? Now, in terms of what this guy was teaching, he'd said this wick is too much of a risk. It's too big, because it can just, like, for any you know, crazy black swan news event, it could just, like, keep crashing, and you'd be, like, out, you know, quite a loss because of this wick. Like, he'd use this smaller wick here. But I would say, you know, knowing that it is trending upwards, I would still try and get in there, although it would be safer to get in with a smaller wick. But the point being is, it's going up, and you're riding these two candles, these two green candles, and you'd be out there for a quick scalp. And again, it repeats itself. It comes back in for another test, and here we go, crossing the river. And as it crosses the river, you want this red candle to give you a good price in, the lowest price. Do you remember? We're going up, so we want the bottom price. So you get in at a bottom price, and off you go. You could get out here, or you can hold on, get out here. But anyway, as you can see, when price moves away from the river value, away, look, it starts to pull back into the river value. It comes back to find value. Price always wants to find value. Don't ask me why. This is like how life is. If you understand value from a young age, you would never be in debt. Trust me. This is something I'm learning. So anyway, you come back to the river, and again you cross the river, and you wait for an entry, and your entry is always off of either the 80 EMA on a small wick, like here you have a small wick, or off of the 20 on a small wick. These here are your entry points to ride all this up here. Now, if you're a scalper truly dedicated, you would either just scalp one candle or 2 or 3 candles. But there are a few traders that I've learned with over time. And another trader has taught me that normally after, you know, a push like this, there will be subsequent green bars. Normally, okay, not always, but normally. So that would give me the confidence then to hold. And knowing that I'm moving away from the river, at least for some time, I can hold this for a few more candles. And normally 3 is a lucky number. 3 is the number. So if it can move 3 more candles, then you can aim to get out at that point. But anyways, this is on a trend. This, every time it went back to the river value, it shot up, went back to the river value, shot up, until it meanders along the river and it changes course. So the river is always changing course. So this is why you need to practice, guys. You really need to practice. You need to put in the time and follow a particular stock or a derivative or an instrument. You know, you can trade gold, you can trade Bitcoin, you can trade Ethereum, you can trade SpaceX, you know, you can trade anything. But you need to practice. You need to practice looking at the river. You need to practice to see how it meanders along the river, how you get in, how you get out, how these candles move like so quickly and so violently. You need to like follow these and practice. And then once you practice, you then choose, you know, a way in which you want to trade, whether you trade options or you trade futures, or, you know, you trade crypto. It's up to you guys. You practice, but you need to learn the charts first. Anyway, I'm going to end it here. It's quite a long video. I hope it helped you in some way. And like I said, this is just for entertainment purposes only. Like, you know, trading the stock market is not, you know, a safe thing. You can lose money. So like I said, always start with a demo account. TradingView offers you a free demo account with my affiliate link down below. So join that. It's all free. And as I say, get started, learn how to read the charts, learn how, you know, price likes to move and meander along this river of value, which I'm learning for the first time, which has really sunk in my mind, because everything needs to establish a value. Like, you don't go out and buy a house and not know kind of the neighborhood and, you know, the value of the neighborhood. You need to know the lay of the land. So anyway, guys, that's it. I'm going to end this video here. Hope you enjoyed it. Hope you found some value in it. Hope you learned something new, whether you're, you know, new or not new. And if there are any other videos that you want me to make, talking, you know, more into depth of what things I've brushed over today, comment below, guys. Comment below. Okay, that's it. Have a nice day, traders, and see you in the stock market on Monday. Okay, bye, guys.